let's get started. We've definitely got a full agenda here tonight. And some of you may have noticed the last minute I changed the title of this presentation, but we didn't change the content. I was talking to someone else here and they said, well, why do you have winners and losers as your title when, yeah, you're going to give them that. But the whole point of this is, to his point, we want to show you how anybody who's serious about investing, that doesn't mean you have to be a serious crypto trader, can take advantage of what we're going to show you as a 4-year cycle going on in Bitcoin. And well, that is the title and the headline. We've got a lot more than that. And what's exciting about it is, well, a couple things. One, it enables us to give you this blueprint that we're going to share with you that has done an amazing job of calling all the major bull and bear markets in Bitcoin. And I would say even more impressive, when Holden started showing me this half a year ago, maybe even longer, he had this whole thing mapped out. And as I've said in some of the marketing leading up to this, it's totally playing out the way the blueprint suggests. And once you learn why, it's really not that surprising that it is. So we're going to show you why, and that's the one thing that's going to drive Bitcoin to all-time highs again. Not only that, it's going to enable us to show you with incredible precision and reliability when you can expect this current bull market to break out to new highs again. And we're also going to talk about 5 cryptocurrencies that I would say that even if you are not trading crypto at all, you should be paying attention to these. And I'm paying attention to them in the sense that this might be a really interesting way to just put your toe in the water and say, you know what, I don't really even want to follow this stuff day to day or that closely, but maybe I'll just make small investment in each one of these things, and who knows, they might turn out to be the next Apple. You can decide after this webinar. We're going to give you the cryptos. You'll be able to do it without doing anything other than that. But of course, it is Market Gauge, and Market Gauge is all about how to trade, invest, and do it in a risk-managed way. So you're not going to get out of here without us showing you how you can do that. And so we definitely, as you can see, have a full schedule here. We are going to be talking about trades and potentially trades that we are in. So we need to make sure that you understand that we're not licensed financial advisors. And for that reason, access to this webinar is for educational and informational purposes only. Of course, if you know anything about Market Gauge, as I just said, we're all about the risk. And this definitely involves risk. That's where you get the return from, knowing how to manage it. All right, so before I start grilling Holden about getting answers to the things that we just listed we wanted answers to, I just want to lay out why right now is an ideal time to be doing exactly what you're doing. And I commend all of you who put no in the questions box or don't have very many years in doing this for being open-minded. I would say there couldn't be a better time, but honestly, crypto, the way crypto has worked out, that has kind of been the way crypto has evolved. Every step of the way, if you knew how to manage the risk, even when crypto is in a bear market, it has been an ideal time to be learning about crypto. But right now, it's particularly timely because we're coming up on what you're going to learn is referred to as a halving cycle. The other thing, unless you're living under a rock, you know that the regulatory environment has taken huge steps recently in approving Bitcoin as an instrument that can be traded with ETFs. The big story behind that isn't just that it's an ETF. It's that it being an ETF is enabling massive adoption of trading Bitcoin and soon other cryptos by the masses. It's just going to make it a lot easier. And without going into how that might affect the market, it clearly affects anybody's ability to participate in this crypto space. Even though, as you're going to learn in this market environment, I mean, that's all cool, and it has really good bullish implications for the industry. But the coolest stuff is some of the other stuff we're going to talk about in this presentation. Of course, the other reason right now is incredibly powerful is because, again, unless you're living under a rock or you're not following Bitcoin at all, this thing is in an awesome bull market right now. And as you're going to learn, we don't think it's anywhere close to being over. And then this last point, number 4, entering a new era. Now, I don't say that lightly. Era to me is a significant word. From a technical perspective and from an adoption perspective, we are entering into a new time of what crypto's acceptance, its adoption, its ability to create new products that are going to drive the way we live and work. And even if you don't figure all that out because you don't need to care that much about the technology that drives it, it is going to affect the way we live and work in a really powerful way. All right, so that's what we're going to focus on. So just give us 45 minutes of uninterrupted time. And if you have any interest in crypto or building your wealth in a way that involves trading instruments that have great volatility, that you can manage your risk, you won't regret spending 45 minutes paying attention here. Plus, I think it's going to be fun. We've never been able to do something like this before because for the most part, this one's easy for me because I get to have Holden, who is the expert at this, 10 times more so than I am, do the heavy lifting. So before we get into the back and forth here, let me just give you a quick backdrop in terms of, if you're not familiar with Holden, if you've been to webinars, you've probably seen me. How many are here for the very first time at a Market Gauge webinar? Because I do them all the time. Holden actually does coaching for our members all the time. So he's very familiar with the format, but he's not often on the webinars out to the public facing. So you're really fortunate to have him here. And Holden, when did you start diving into crypto?
So I'm 26 years old is a good place to start. So when I was back in college, I remember we were sitting in a dorm room, all looking at Coinbase on our phone in 2017. So I think
Bitcoin, so what were you doing with that Bitcoin?
21, 22.
Yeah, and what were you buying with that Bitcoin on your phone?
Well, so that's the honest version. Is back in 2015, 2016, when I was in high school, I remember I bought Bitcoin for around, don't quote me on this, it was probably 100, 150 bucks a coin at the time. And that was so that me and my buddies could order fake IDs. Yeah, no, I don't have any of the Bitcoin from back then that I bought at 150 still. If I did, you guys probably wouldn't have me here.
That's right. Yeah, I am always thankful for that. But then you also wrote a paper in college that was focused on Bitcoin. Because I remember when I was talking to you for the first time about coming to join Market Gauge, that I thought that was cool. So share that as well.
Sure. Well, before I came to Market Gauge, I was working for a cryptocurrency. Actually, this is kind of unheard of in the industry, but I was working for a startup that was actually doing cryptocurrency hardware. That's pretty much unheard of because everything is digital. You can't hold these coins physically. I was working at company that was trying to establish a network of cryptocurrency to fiat currency or vice versa ATMs. Basically, I can put in cash, I could get crypto. Even before that, when I was graduating undergrad, my degrees were in international studies and business. So the intersection of those two fields at the time, with the emergence of crypto, blockchain on a global basis, I ended up writing, I think it was a 70-page thesis on how blockchain technologies and governance can be used in, simply put, disaster-stricken or developing areas of the world, basically to help them rebuild from a technological and infrastructural standpoint. So I go far beyond trading. I'm pretty involved in the industry as a whole. I like to say that I have a pretty deep understanding.
You do. You absolutely do. We always have a good time in our sales and marketing meetings when we start talking crypto. Rob especially, many of you probably know Rob especially, will often blurt out stuff like, man, you have to get in front of more people. It's always fun. So we're doing it now.
Yeah.
So let's dive into the blueprint. I'm going to let you I'll let you drive from now until we get to the trading part. But as you know, I'll be asking the questions.
Sure. Well, so this blueprint that you're talking about on Bitcoin's price action is something that we have been focusing on in our member-only coaching sessions for a couple months now. I say a couple months because it's been really actionable starting a few months back, but in reality, we've had this framework or this blueprint for understanding Bitcoin's price action for almost a year and a half, 2 years now. It's been tweaked ever so slightly, but the same general idea or general pattern for how Bitcoin has always traded is something that we wanted to identify. Because if you can understand how it's traded historically, and that pattern is something that continues and repeats, theoretically, we can trade based off of a similar pattern in the future. So Jeff, if you want to go to the next slide, you guys can see the general pattern that I'm talking about here. So like many other traditional asset classes, Bitcoin, and I'm going to talk about Bitcoin for a few minutes here specifically, but Bitcoin effectively represents the whole cryptocurrency world, right? It's 50-something% of the total cryptocurrency market. So like other asset types, Bitcoin has a long-term macro cycle with repeating patterns, repeating segments that happen in the same order, the same shape, direction, similar velocity every 4 years, roughly. So you guys can see on my screen those four sections.
Do you want to take the screen? Do you want to?
No, you go ahead and keep it. I've got it up on my end too. So if you want to just click through on these, but you guys can see the general pattern here without really having to squint too much, is already pretty apparent. And there's been a ton of other analysts, research firms that have attempted to rationalize Bitcoin's long-term pattern. I've seen it done in really convoluted ways that at the end of the day kind of shoot themselves in the foot by being overly complicated. And I've seen some that are really simple. I like to think that our blueprint is a little bit more on the palatable side. Anyone can really understand this just at a glance. So all of that being said, this right here, what we're looking at is just a glance at this blueprint. Jeff, if you want to go to the next slide, we can show everybody a slightly more embellished version of the same chart where we now have titles for each of the different segments of this long-term pattern on Bitcoin. So we're looking at a weekly chart, and you guys can see we have the same groupings, the same features for these boxes on the screen. Every cycle that I'm talking about here has a bull market, which is our green box, a bear market, which is going to be red, accumulation in yellow, and then expansion in that purple blue hue. So we are currently in the expansion phase, which is both the beginning of the end of the current cycle and the beginning of the next cycle for Bitcoin, which also makes it, in my opinion, the most exciting and arguably the most actionable segment of Bitcoin's long-term cycle. So where we're at right now, we've been waiting for this moment for, since the 2021 bull market, because basically since the beginning of 2022, we were bear market all of 2022, sideways market for the majority of last year. We got some bullish action at the end of the year, which that's not untradeable, but it's definitely a lot harder to navigate. So where we are
let me interrupt you there, because you say we've been waiting for this. That is true, but one of the things that this this whole framework and these phases has done is made it a lot easier to know kind of when to press, and press meaning like when to expect big moves versus when to trade it from the long side, but don't expect that it's going to be craziness.
Exactly.
Just out of curiosity, can you point me to make sure that I'm right in terms of when the FTX debacle really
You're right under it. You're right under
here,
it.
right?
We do have black swan events which give us slight deviations.
But so this is the FTX right at the lows, right?
Yes, it is.
Yeah, well, I couldn't remember if it was this low or this low.
It was that one. It was like a extra false bottom in the market, basically.
Well, it wasn't that false. It was absolutely the bottom.
We can debate this another time. The bottom was in, and then the FTX crash pushed us.
Yeah. So I don't want to throw you off your rails, but I just wanted to point out that while yes, we may have been waiting for 4 years or whatever, not almost 4 years, for the next expansion / bull phase. But you've been pretty much calling the bull market while it was an accumulation phase based on this framework for a long time. So it's been, this is why I'm so excited to share with it. And this is why we're really trying to get the word out about how important and how cool the expansion phase is. But anyway, go ahead. Sorry.
Well, no, that's a good transition into the next slide, actually. And real quick, I just see this popping up in our question box. Gene asking, is there a ticker symbol to follow? We are pulling these charts from TradingView. I typically recommend TradingView for charting any cryptocurrencies. And you will always want to search for your symbol by typing for Bitcoin, let's say BTC USD as Bitcoin to the US dollar pair, Gene. So if you're trying to pull these charts up on your own screen and follow along, we typically do BTC USD, and we like to use Coinbase exchange quotes. But back to the topic at hand. When I was trying to say that our framework for understanding this long-term cycle is simple, that's because we've really been able to synthesize it down to just these 4 phases with pretty simple definitions for understanding where you're at in the grand scheme of things, right? So just quickly going through, a bull market is what it sounds like. You're going to get new all-time highs, euphoria, excitement. Everyone's going to pile in. You'll see the absolute most speculative coins in the entire market outperforming pretty much everything else. Every bull market, we see new coins that no one's ever heard of. absolutely take off. It's the most exciting time for any market cycle, which means, of course, it has to be followed by a bear market directly after. That's basically when we fade away from the new all-time highs, we start going into free fall and wait for Bitcoin to bottom out effectively. In bear markets are pretty much the hardest phase in the cycle to predictively say or definitively say the bottom is in. So
they're also really good at washing out the non-disciplined investor.
They are. We say in our definition that our bear market phase has tons of suckers rallies in it, and that is one of its most defining features. Is it oftentimes will feel like we're out of it, we're in the clear, when in reality we're all just getting sucked back in. Accumulation is what we just kind of broke out of it. I got to look at the chart a little bit closer, but I believe we're calling it the first few weeks of October. This past October was when the price of Bitcoin had reached a point where we can definitively say it's no longer in its accumulation range. It is officially in its expansion range. So
now, again, to interrupt you and to be fair to your blueprint here, there's a lot more to it than these colored boxes. A great question would be, well, how do you know to go from the accumulation to expansion and phase? And Holden does have that all figured out at rules base. That means that the definition for the expansion phase is a specific pattern / formula. But I asked him not to go into that level of detail in this presentation because we've got too much other cool stuff. But I just want everybody to know you don't just take a crayon with your favorite color, draw a box around the consolidation areas and call it a new phase. I'm a big fan of taking crayon and boxing in the markets, but that's not what this is.
No, so, and we do have a lot of really important technical levels that are components of the deeper analysis of this framework. But the reason I wanted to look at these definitions is specifically for the definition of expansion. One, because that's what we are currently in within the larger cycle. And two, because it is easily the biggest misnomer of this framework. So I say that because expansion doesn't actually always take place until the latter half of the current phase. In reality, what we're currently experiencing is further accumulation or consolidation in a higher range, preparing to return to all-time highs. So, Jeff, if you want to go ahead to the next section.
We've got some good questions coming in here, and guys, we'll get to them probably in the Q&A section. Otherwise, we might be here for too long. Like, where's distribution? We don't have it. We could talk about that in the end. And Andrew, great observation.
Andrew, great question.
The extension of the expansion phase as years have gotten on. That's a great question.
We will touch on that, Andrew. We will get to that. But right now, we just want to explain what is the driver of this 4-year cycle, right? We see that it's there. We know it's happening, but what's the catalyst?
Right, exactly. This is the cool part.
So, Jeff, if you want to go ahead to the next slide, a lot of you will already have either heard about or read about, researched, or to some degree be familiar with the Bitcoin halving.
Let's ask. How many people know what we're talking about when we say halving? And don't be shy. This is definitely not a test here. If you don't know what we mean by halving, I'd certainly like to know, because to me it's a bit of an interesting concept, and I'm always interested in what areas of education we should be pushing on.
Well, what's good is it looks like a lot of people have heard of the concept. I do recognize a few names, and I know I've talked to about this in the
I hope
past.
they're the ones that say they know.
I see Vinny here. Yeah.
Okay.
All right. Well, we do have enough people that have not heard of the halving where
Yeah.
I feel like I should definitely explain it.
Oh, we're gonna explain it anyway, because I know people are out there, they don't want to admit things, but I was just curious. Go ahead. I won't hold you.
Before I explain what it is, let's look at when it will happen next. So right here, if you guys go on Google and just search for Bitcoin halving clock or halving calendar, you'll find 20 different websites, all relatively close in their estimate to what we're showing on the screen here. And this is a screenshot taken recently, so it is probably the most accurate prediction we've got right now. But Bitcoin is designed, and you guys can see before we go to the next slide, we're expecting the next halving to be just in about 2.5 months, 3 months in April. But Jeff, if you want to go to the next slide for me.
Right around tax day, for those of you who want an easy way to remember it.
Thanks for reminding me. So here is why that date is significant. Roughly every 4 years, and I say roughly because it's not a time-based mechanism, but it's a little bit more nuanced than that when it comes to the blockchain itself. The original anonymous creators of Bitcoin made a few really key decisions to how it would function in order to guarantee its long-term success and adoption and usage. A few of those decisions that were made that are inherent to the way that Bitcoin is structured and its technology is structured as one. There will only ever be around 21 million Bitcoins. So individual units, one Bitcoin, there will only ever be 21 or so million units. There's no mechanism.
Why?
Well, the idea, and you guys can see on the chart on the screen, the idea there is that by capping the supply, you theoretically will reduce long-term inflation. And by not just capping the overall supply, another key decision that was made was to cap the rate at which that new supply of coins is able to enter circulation, right? So if you guys look at the red line on this chart, this corresponds with our vertical dashed lines. Each one of those is a halving event. So again, they take place roughly every 4 years. What is happening on that halving event is what the name describes. The amount or the rate of new Bitcoins that get introduced into circulation is half of what it was in the 4 years prior. So the x-axis here, you can see it shows 50 Bitcoin, and then it shows a halving became 25 Bitcoin. That represents the amount of Bitcoin earned by network miners. We've all probably heard of miners by now, or network validators for processing traffic and transactions for the network. So if you process the right transaction at the right time and you get lucky enough, you complete what's called a block of information. If you are the one who completes a block of information, your reward is new Bitcoin being put into circulation by being gifted to you. So that is the entire mechanism of how new coins are minted and put into circulation. And the rate at which I can earn those coins gets cut in half every 4 years. So currently, if you were to successfully complete a block as a network validator, you would earn 6.25 Bitcoin, which is a lot of money. It's very difficult to complete an entire block. Come April, that rate gets cut in half again to 3.125, until the next halving. Make sense, Jeff? Or did
Yeah,
I go quick?
and so just to be clear and admittedly to repeat what you're saying, a halving happens based on a certain number of Bitcoin that have been created. So we don't know how long it's going to take to do that. This is an estimate. It just happens to be working out to be roughly every 4 years.
The difficulty to complete a block of information on the network corresponds roughly to the amount of total network power that's going into validating it. It ends up being almost the exact same amount of time in the grand scheme of things for each halving period.
Yeah, it's pretty cool.
They did a good job, whoever it was that created this thing. But you guys can see the significance of this event that's coming up in April is effectively half as many new coins will be put in circulation over the next 4 years as were in the previous 4.
Yeah, and so that is the one of the answers to my question of why will there only be 21 million? Because the rate at which we're creating more is getting smaller and smaller, and that's what this Bitcoin supply line looks like. Anyway, can we go to the next slide, or you?
Absolutely, especially because I'm starting to get individuals asking me the hard questions that I don't have time to get into right now. So we should.
Yeah, well, we can look at. Yeah, I don't want to, as an econ major, I don't want to keep nerding out on a graph that has inflation in it.
No. All right. So now we have the same chart we were looking at before with a few more overlays. Now we can ignore my horizontal dotted lines for the time being. I did want to include these on the chart so that we can all kind of see there are defining features of each phase which help us establish and predict when the next phase will begin, what that phase's range will look like. Basically, we can establish before it even begins where Bitcoin will be trading when it gets to that next range based on where it was in previous phases. So that's what these dotted horizontal lines are. But now we also have our vertical lines, which are showing historical halvings. So we have the first, second, and third halving.
1, 2,
right,
3.
And we also have our fourth halving, which I didn't mark on the chart, but you guys can see where it's at. And something that I think it was Andrew pointed out is our halving actually occurs not in the middle, but within our expansion phase every cycle. So we aren't defining the phase itself as being completed once the halving occurs. The halving is just another catalyst within the broader cycle. It's a driver of the cycle. But just because the halving is going to happen in April doesn't mean we're going to be done expanding by our blueprint.
Because, right, and this is the cool thing. If I could just give Holden some kudos here. First of all, the horizontal lines are like part of the secret to how we're determining when the phases start and finish. Yeah, we do get into that if in the member section, Holden will geek out and show you the answers to that. But the cool part, as he was just describing, is that the halvings happen within these expansion phases, and then the horizontal lines are defining what we expect the price action to do. So the halving is a catalyst; it's a fundamental catalyst, but we're still waiting for the market action to do what market action is going to do. There's no law out there that says the halving has to result in a bull market, but the way the market has acted every single time, expansion, right? Expansion, halving, bull market, expansion, halving, bull market, expansion, halving, bull market, expansion, halving, fill in the blank. That's why we're excited. And as you're going to see in future slides, the time frame is even uncannily predictable. I want to get off this slide unless you have anything else.
No, let's go ahead to the next.
So you guys all had your chance to take a snapshot picture of that for all you technical geek nerds out there who want to go back and look at the horizontal line and try and re-engineer it. We just gave this.
I'm sure that I'll get suggestions for changes or improvements. This is a living, breathing blueprint. Like I mentioned at the beginning, we are always open to considering anything that can make this more accurate, more reliable moving forward. So if you guys notice anything that you think we may not have, feel free to let us know.
All right, so we teased this. We teased it. Yeah. Wow, how are you going to know when it's going to hit all-time highs? And honestly, I thought you were being a little eccentric when you were saying you could predict this stuff as well as you said you could about a year ago. But I have to admit, I'm eating crow now because you have been doing it for a year, and this is kind of cool.
Well, and this also relates to Andrew specifically, back to your question, and I'll read it out loud for everyone in a minute when we get to the right slide. You were asking the right question as to part of my explanation for when we'll be back at all-time highs. So, Jeff, if you can go ahead to the next slide. If you guys remember back to our 4 definitions for each phase, one of the key components of how we define our expansion phase is it is completed, or we end our expansion phase and begin our bull phase once we get a weekly close at or above our previous all-time high. So you guys can see this on the chart. We've divided our expansion phase into kind of quadrants here. So we have a left side and we have a right side. We have our bottom left quadrant highlighted for the previous 2 expansion phases as well as the current one. This goes back to the bit earlier where I was mentioning the misnomer of expansion. In reality, our expansion phase is going to continue accumulating just in a higher established range than our accumulation was. And again, we have ways of distinguishing those levels when we get more into the nitty gritty. But right now, what I want to point out is that the highlighted darker purple quadrant in each expansion phase is where we do see that accumulation or sideways price action kind of continue, just in a higher range. But you can all probably tell that right when we get to that vertical line for each halving event, it can happen a few weeks before, it can happen a few weeks after. Generally, there's just significantly increased volatility and bullish price action right around the time of our halving. Other analysts may even want to, if they were to implement my same 4-phase framework, and I've seen 5-phase ways of looking at this. I saw someone earlier was asking where my distribution is. I don't have distribution in here. Within our 4-phase framework, you could argue that our expansion phase should end at the halving date. But in reality, the real expansion of that phase takes place after the halving. So this is kind of going to be in our faces before we really know it. I think that a lot of the market who is just now coming back around to crypto after being in absolute despair about the whole thing for the last 2 years, I talk to a lot of people who are still sitting on their hands, thinking that they're going to time this perfectly. They're going to wait for the right opportunity to buy a dip. That's all kind of guesswork. What we're looking at right here is, again, a repeatable pattern where we believe once the halving comes, that will kind of kick us into gear to expand back to all-time highs and begin a new bull market. Now, here is where I want to I'm going to go look up Andrew's question. Jeff, could you go ahead to the next slide?
Before we do that,
Sure.
I didn't think about this, but the markets tend to run up into news that they know is coming. And now that the market is kind of savvy about what Bitcoin's all about, first halving, nobody knew what Bitcoin was. Second halving in 2017, people did, I guess. I didn't. But now that I'm looking at the market action, I remember exactly where I was. I didn't understand what they were talking about with the halving. But my point is, do you think that we could see a run up into the halving date as we have in these last two that we can see here? I can't see the one.
It's a good question, but I think I'm going to approach the answer differently than how you might have expected, which is I would rather look at the past few months of price action in correspondence to big news events as being more influential on how the market's going to react in April than previous cycles were. One, because yes, to your point, Jeff, the awareness of halvings, the awareness of Bitcoin, of crypto as a whole, has progressively grown with each year, with each cycle, with each bull, bear, accumulation, expansion phase, right? We're at the point, and I just pulled up, for those of you who want to follow along, the technology adoption S-curve on Google.
No, don't pull that up, guys. Pay attention to him. Don't encourage people to go Google it.
We are at a pretty critical point where I think, and I've been saying this to our subscribers and our sessions, I think that the reaction in prices across the cryptocurrency market to news events is going to continue to get more and more volatile throughout 2024, especially as we get closer and closer to returning to all-time highs. The best example that we can refer to recently would be the January 10th approvals of the physical Bitcoin ETFs, and then their corresponding IPOs or opening for trading on the 11th. The 3 or 4 months leading up to January, which is when pretty much everyone expected the ETFs to be approved, we saw the entire market rally. The 2 or 3 weeks leading up to the actual approval, we saw a 10-20% correction 2 or 3 days before, and then pretty much prices flatlined through the approval, through the launch of the ETFs. So it was definitely a buy the rumor, sell the news. Thank you for the ETFs. I don't know that that's going to be the same for this next big catalyst, being the halving, but it's definitely something to consider.
I'll put money on it. It will happen because there's so many people with the ETF. Like I'm going to say it's like kind of almost a dumb money trade, but it's not dumb. It's just and with our stuff, our technical indicators and the way we teach, being able to look at the markets from a discretionary point of view, we don't have to worry about predicting that it's going to happen. It's just if it starts to happen, and whether you're using real motion or just patterns or our phases, if we start rallying, into April, you can't not look at that. Well, I can't not look at that and say, all right, the bulls have the bit in their teeth, and you got to run with this. Just watch out when the halving comes. But we know, I'm going to let you continue, that it's after the halving is when it really gets fun.
And that's exactly what we're expecting. So, Andrew, your question, let me just read, if you don't mind, I'm going to read for everyone. Let me just scroll up. And we've got a lot of responses, so you guys have been pretty active. All right. So Andrew pointed out that each previous range has been longer than the one before. Would we expect this expansion phase to be any longer than the last one? And my answer to that is partially, we're not sure, but our best guess is we expect it to play out actually pretty similarly to the past two. So I say the past two expansion phases because we only have 3 historical expansion phases. And unfortunately, the first cycle of Bitcoin from 2009 to 2012 is slightly less reliable than more recent data, pretty much just because no one was really around to trade this stuff except for early adopters. So there's definitely not as reliable information looking back before kind of 2014, 2015. But looking at the past 2 expansion phases, we had in 2016, let me get rid of my question box now. In 2016, it took 30 weeks from the halving date for Bitcoin to return on a closing basis. And you guys can see there was a little spike right before the end of our purple box, but for it to close above previous all-time highs, it took 30 weeks after the halving. In 2020, in our most recent accumulation phase, it took 28 weeks after the halving. Just averaging those out, we'll use the number 29 weeks, and that places us squarely at around the first week or so of November or the last week or so of October, which also historically is the best time of the year seasonally to be considering buying or trading cryptocurrencies in general. Basically, Q4, in any given year where we're expecting bullish price action, we either expect it to begin or to have already begun by Q4. So seasonally, this also makes sense for our expectation that Bitcoin will be back at, I've got to look up the exact price, but 69,000 by end of October, beginning of November.
Any questions before we? I think you.
Well,
this concept, right? Because we're going to go to the next concept, which is the 5 individual currencies, which is a totally different direction.
The last thing I do want to know while we let people throw in some questions, though, Jeff, is that you should never expect from market gauge content for any of us to predict a price that Bitcoin or any other cryptocurrency will go to unless it's actually been there before. We will never say Bitcoin's going to be at 100,000 this time next year. We're never going to say Bitcoin's going to be at 1 million in 10 years, like Kathy Woods likes to say, right? What we are comfortable telling you is that we expect Bitcoin to return to a level that it has already been at in a time frame that it has already followed by the end of this year.
So here's a really interesting question from Gene. How do you know the halving has taken place?
So the halving is a big public event. I want to say that I can't remember if it was the last Bitcoin halving or maybe it was the last Ethereum network upgrade when they switched to proof of stake. This stuff is so mainstream now that even Google had it as like their home page. It was the first thing that would come up. I think it was the Ethereum upgrade. So once the network approves, adopts, and pushes this new rate after the halving, you'll basically either see it on Twitter, or you'll see it on Fox and ABC, CNBC. It'll be a big enough of an event that it will be, blasted from.
And you know what? I interpreted that question a little bit differently in terms of the reason for asking. It won't matter to us trading. Like we won't see anything different. Bitcoin's not going to it's not like a dividend where the price of your stock might drop by the amount of the dividend. It's not like a stock split where all of a sudden you'll get a 2-for-1 means you get twice as many shares showing up in your account. In short, the way I was interpreting the question was, quite honestly, the only reason you will know it happened is because it will be news, because the miners will know it's happening because they're getting paid less now for the work. But other than that, there's no noticeable effect on your account or on the coin itself.
Wait, Jeff, do you see that somebody pointed out election week? When's election week?
November.
I
didn't. Okay, no conspiracy theories. Let's get on to the because we don't want to go all night, and you and I both know we could.
Sure.
Let's talk about the cryptocurrencies
Sure.
that anyone can bank on, and this is so. When we were putting this together, I asked Holden to come up with, as an example, 5 cryptocurrencies for those of us who are new to this, or maybe you've been doing it for a long time. But there's the question that I think a lot of people struggle with, and I'll even put myself in this boat. I think Jamie Dimon is in this boat, which is, what the heck do we even need this stuff for, right? Why isn't cryptocurrency a scam? Why isn't it just this, one octave away from the metaverse or something? So I said, let's come up with 5 examples of that can demonstrate why cryptocurrencies are actually a real thing. And I would say so much so that it's a real thing that I believe this. Like, once I understood some of the technology behind it, and I don't understand 90% of it, but once I understood some of the technology behind it, I could really see how these things should be treated as we would stocks in technologies or companies in technologies that we don't really understand. So let's take a look at these 5 through that light.
Mm-hmm.
And I'll let you, what are they? Why'd you pick them? And take it from there.
Sure. So first things first, what we're looking at on the screen is obviously more than 5 symbols. We've got 10 symbols on the screen. I do know that we have a few active subscribers of our quant model on the session right now. So you guys will be familiar with what we're looking at already. This is pulled directly from our member section. It is one of the driving features of our CryptoPulse quantitative trading model, where we will consider the top 10 coins by both market cap and what is available for trading in the US. We will consider the top 10 coins at any given time for trade entry based on a combination of different metrics. Of those 10, and you guys can see we have something called the FAST TSI score on here as well. That is what that's our trend strength indicator. It's one of our ways of measuring which coins are trending stronger relative to the other coins on the list when we are considering a new trade entry. So from this core list of 10, and these are the 10 symbols that for this current quarter, our model will consider for trading. The beginning of the next quarter, we will review the top coins in the market. If there has been any changes in market cap leadership, we will swap out any old coins for any new ones. So just letting all of you know, we actually didn't have XRP included as a tradable token here until the beginning of this year. That is because it is now both not considered as a security in US federal court, as well as it's tradable on Coinbase again. So I just wanted to point that out to show everybody that we are actively looking to follow what is trending in the market, not just trading coins for the sake of trading coins. So Jeff, if you want to go into the next slide, I've picked 5 of my favorite coins, or maybe the most important coins from that list of 10 currently. Number 1 is going to be obvious. We all know what Bitcoin is by now, and something that you may not know is that it makes up over half of the total cryptocurrency market capitalization. That's really no surprise. Bitcoin was the first cryptocurrency, so it has this pioneer advantage. It was created in 2009. There were other similar technologies that were created in the years shortly after Bitcoin's inception, but none that have gone mainstream or had staying power. Bitcoin really has established itself as digital gold, right? So one of the big reasons why we all like to call Bitcoin digital gold, or maybe some don't, is because of its storage of value as a feature of the coin. So within the crypto space, Bitcoin is going to basically be your average measure, not all the time, but oftentimes, of what the market as a whole is doing. It's going to have less volatility than other major coins because of how large its market capitalization is. And the days of seeing Bitcoin rally 1,500% during a bull market are probably behind us. And for that reason, although it is significantly more volatile than gold, for all intents and purposes, it is still the closest thing to gold within this landscape. Now, the other big factor for why Bitcoin is Bitcoin and will continue to be successful is it has had continued widespread adoption. This has been international. It has gone from niche, technological, philosophical, political groups to now a very mainstream technology. It's a currency that's owned by central banks around the world, by, now offered as an ETF by some of the biggest names in the financial world. And lastly, we already touched on this earlier, but Bitcoin has that limited supply of 21 million coins. There are other coins and other blockchains that have been created in the years since Bitcoin that try to emulate this, but Bitcoin really is the first and the best to implement a lot of its features that make it the longest lasting blockchain and coin that we've got.
Number 2.
Ethereum is going to be the second largest cryptocurrency by market cap, which is shocking to say given that it is less than 17% of the total market cap. So we already have, 60, we'll call it rounded up to 70% of the total market cap is covered by Bitcoin and Ethereum. Ethereum is wholly different from Bitcoin, whereas Bitcoin operates historically more as a means of transacting than anything else. It's a financial instrument, something that you can speculate on or make payment with. Ethereum takes it a step further. So don't quote me on this. I believe Ethereum was created in, was it late 2016 or maybe early 2017? So it's still relatively new, which is crazy to think about given its market share. But Ethereum was the first blockchain to introduce smart contracts. Smart contracts enable the entire, what we call and what you will likely hear more about as Web3. So Web3 includes decentralized applications, financial tools, trading, games, marketplaces, insurance, anything financial, anything technological that you have done in the past on the internet. You can imagine that there's already a way to do that with the blockchain technology that exists on Ethereum. And Ethereum's token ETH is the general currency of that network. that allows for payments to be made across the network. So the size and scale of Ethereum is huge. It's not the only blockchain, especially not today, that has all of these features, these smart contracts and applications and features, but it's definitely the biggest. Again, similar to Bitcoin being the first to do what it did, Ethereum was the first to the party, but it has run into some issues with the ability for Ethereum's technology to scale alongside the adoption that it's undergone, right? So Ethereum coming along in 2017 got adopted so rapidly and on such a wide basis that they've already had to update their network probably, I don't know, 4 or 5 times maybe in the last few years just to address basically latency issues. They were having issues scaling. So other coins that we saw on our list, like Matic or Polygon, are scaling solutions built to help Ethereum. But this is definitely one of the big issues that Ethereum's got to overcome. So if you want to go ahead, am I allowed to say that this one's my favorite?
Nope.
Then I won't.
Okay.
Those who have been around our content for a while or have spoken to me in the past will know I like to speak about Solana quite frequently. I have definitely been an early adopter of this coin. It has only really been around for about 3 years now, I believe. So Solana is similar to Ethereum, and for all intents and purposes, we can call it Ethereum's biggest competitor because they do all the same things that Ethereum does. Both Ethereum and Solana are what's called a layer 1 blockchain, or the first layer of which countless other layers and businesses and products and services can be built on top of or exist within. So like Ethereum, it has decentralized finance, it has decentralized applications, it has NFT trading, it has anything that you can think of or have heard of regarding blockchains. Something that it does have that Ethereum doesn't is, and I'd have to look at the most recent stats on this, Solana's throughput and scalability is pretty much unmatched as of the current date within the crypto industry. So they have the highest transaction speeds, or TPS, transactions per second. They also have some of the lowest transaction costs. So right now I could go send Jeff $1,000 over the Solana network, and I think it cost me half a penny. So competitively, Solana at only 2.6% market share of the total market cap is still, I mean, what is that, 1/6 or 1/7 of, yeah, 1/7, 1/8 of where Ethereum's market share is currently at. And Solana is also one of the fastest adopted blockchains, networks, coins, even today. You guys can probably go see what it did, just climbing from $22 just to over $100 in the last 3 or 4 months alone.
So I'm going to put you on the spot here. Is there a product or service that we may be familiar with as laymen out here in the non-crypto space that is using Solana? We don't even realize it.
Oh man, I'm sure that there is not one that comes to mind right away, but here's one that you will all hear about pretty soon if you haven't already, which is Solana. And I don't have this on the screen, but Solana already is the first major blockchain company or project to come out with its own hardware in the form of a smartphone. So there's a device called the Solana Saga, or Sega, it's SAGA, Saga, I believe, where I actually have an allocation for, I had an allocation for the first device. I didn't take it. I'm going to take it on the new device. They have developed an Android smartphone that is fully compatible with any service or application or transaction type that could possibly exist in the Solana ecosystem or the Solana network. So basically, they have already created a physical hub for accessing their entire network that can also do all the other things that your smartphone can currently do, right? So the Solana saga is something to keep an eye out for. I really believe that this is something that no one else in the crypto space is doing yet.
Cool. So this isn't their smartphone's not going to be the equivalent of the old what was it, Newton or Lisa? I know you weren't even alive when that came out, but you know the technology space. You may have heard of it. I won't go down that path, but Solana, correct me if I'm wrong, is the one that you have drawn the analogy to Apple with. Am I right there?
Yes. So I like to personally subscribe to the idea, and I don't know to what extent yet, that when all is said and done, there will likely only be room for a handful of serious winners or big winners in this space. There are thousands and thousands of projects and companies similar to the dot-com boom competing to do the same things as each other with similar technologies, similar approaches, slightly different ways of doing things. You guys can see Solana, again, has only been around 3 years. It's the biggest competitor to Ethereum, which is eight times its market share or 7 times its market share. So I think if there's anything that has a really good chance of claiming some of that market share during this current cycle, I think there's a good chance we're looking at it on the screen right now.
I'm going to jump to next one.
Sure. So Chainlink is wholly different from almost any other coin that you guys have heard of or that we've already talked about. Chainlink operates more as a technology company than really any of the other major coins that you'll just read about in general. And I say that because they don't exactly have a retail-facing product or suite of services. Chainlink is a data oracle or an oracle network where effectively they utilizing smart contracts. So Chainlink was originally built as a layer 2 on top of Ethereum, actually, right? So without Ethereum, we wouldn't have had Chainlink to begin with. But now Chainlink can operate with any major blockchain technology. And what they do is they allow for real world data to be bridged into blockchain applications. So, just pulling something out of nowhere here, but theoretically, I could use Chainlink's technology to pipe meteorological forecast data into a smart contract, and I could offer a contractual bet to you that I think the weather will be 70 degrees as the high tomorrow. And that contract will automatically execute by both having the terms of our bet established, as well as the actual restrictions and all of that piped in live from an external source. So Chainlink, that's really how they made their name. Chainlink has a ton of other tech that they've been working on, a lot to do with privacy, a lot to do with randomization in transacting. But one of the biggest things that they're known for is they are a long time partner of Google and Google Cloud. So with a partner like that and only 0.6% of the total market share, and also Chainlink is up significantly in the last 24 hours, definitely one not to forget about.
Yeah, and Vince is pointing out, we can talk about this later, that the alert for it came out.
Did it?
Yeah.
Yes, it did.
We'll talk about that later. Don't get distracted because we got Ripple here to wrap up the 5.
Ripple is the prodigal son of the crypto world as a whole, right? 2018, I believe the SEC first sued Ripple Labs, which is the company behind the Ripple token and network. And that lawsuit did what many had considered up until recently a death stroke to the project. They were removed for trading from every U.S. exchange. Some of you out there probably still found ways to buy it in the last several years because, if you really wanted it, you could have gotten it, but not from Coinbase, not from Kraken. You couldn't have bought XRP from anyone legitimate since 2018. And so I believe it was last August in a federal court hearing between the SEC and Ripple Labs. So as they were wrapping up this several years long lawsuit where the SEC had alleged XRP was offered as a unregistered security, it was decided that no, they had not offered an unregistered security, effectively making XRP, to my knowledge, the only coin that has been forced to be acknowledged in federal US court as not being a security other than Bitcoin. So although its price action has been super boring as of late, I don't know that it's found itself yet. I wouldn't count it out as the conversation continues on ETFs, because we have, if you guys read up on it, a series of Ethereum ETF applications currently pending that are all to be decided on at the latest by May 23rd, I believe the date is. The question is going to be, okay, if or when our Ethereum ETFs get approved, what's going to be the next coin to get big attention and the ETF effect? I'm not saying that it's XRP, but I believe it has as good of a chance of being in the vote for that as Solana or Chainlink or some of the other major coins that are out there.
Cool. So would you say that if for someone who's just getting involved in crypto and wanted to have a handful of blue chip crypto currencies on their screen, that these 5 would be the ones that you'd focus on right now? So it was Bitcoin, Ethereum, Solana, Chainlink, Ripple.
Yes.
All right. So we do have some questions. Some are how to do things technically, tracking them. I'm going to jump into the final segment here. How do we actually trade all this stuff? So if we just take a step back and think about what we've covered so far, we've got this framework for understanding where we are in the Bitcoin trend. But the truth is that the Bitcoin trend is really representative of the large cap trend. When I say large cap, I mean the trend of large cap coins, much the same way back in the I'm not even going to say back in the day, like even before the S&P 500 existed, you had these 30 stocks called the Dow Jones Industrial Average, and everybody looked at those 30 stocks to determine what the stock market was doing. When we talk about large cap cryptos, it's kind of the same thing. I mean, as Holden mentioned, there's thousands. I mean, when we say thousands, probably tens of thousands, getting close to 20,000, I wouldn't be surprised, of coins out there.
There are 2.2 million different cryptocurrencies.
Wait, are you talking NFTs too, or currencies?
That is individual contracts that exist as circulating coins. So I could go spin off a coin myself right now.
Yeah, but so you're saying that's up from like 15,000 2 or 3 years ago?
Yes, it is.
Holy moly. All right, well.
2.2 million plus.
So we're talking about the large cap ones, to my point, right? So Bitcoin and this framework gives us a framework for understanding how the market's working. Layer on top of that, we've got this halving event, which is a catalyst that has proven to be a reliable indicator for identifying when this framework is really going to kick into gear from a bullish point of view. Now, we as Market Gauge, if you're not familiar with Market Gauge, and some of you did say this is your first Market Gauge webinar, and so we're super glad to have you here, as we always are. This one, as I mentioned early, is a little different. One, because we're diving into crypto. Two, because it's a Q&A format. But it's the same in the sense that Market Gauge has been around since 1997. And it was founded by myself and Keith, who you can see right under me in the picture, and Michelle, Keith's wife, who were floor traders on the commodities exchange. I joined Keith right out of college to help him be his assistant as a floor trader. And we've been working together ever since. Keith and I worked at Millennium Partners, which is still today one of the largest, most successful quant-based hedge funds. And it is both a combination of Keith's instilling of a systematic, methodical approach to day trading on the floor, to the Millennium Partners' insistence that every strategy be methodical, if not completely mechanical, that we still adhere to today in all of our strategies, including the crypto that I'm about to show you. And Keith and Michelle are involved in managing money at Market Gauge Asset Management. Some of you may have seen Mish on any one of the major news organizations. She's out there almost every day. And while we are web-based, everything we do is web-based, we definitely don't want to be a faceless organization. So, of course, you can get us with info@marketgauge.com, but a better way to get us is get us a live chat. If it says offline, use it anyway. That'll convert to an email. It's the fastest way to get to us, and someone might actually see it in the middle of the night. Also, if you want to call us, please don't hesitate to give us a call. Mary can answer any questions that you've got in the office at the 888 number. Rob, who is our chief strategy consultant, knows all our products, happens to really like crypto too. And he will be able to have a real conversation with you about what we do that might mesh with what you do. And that's his cell phone number. Send him a text if you want to talk to him, or schedule a call with him by going to marketgauge.com/call. Don't call him at midnight on Eastern time, because I don't know why, but he'll have his phone on and you might just wake him up. So what do you need to succeed in the crypto space? Because I think one of the things that hopefully we've demonstrated is that now is a great time to be focused on it. You are doing yourself a great favor to be getting educated in it. Whether you choose to trade it or not, I commend you for learning about how it works. Because in order to be successful with this in terms of a financial goal, you really should have some kind of training. You really should have an approach to managing your risk, and you really should have a mentor. And now that you can see that our best mentor around here, Holden, isn't as intimidating as perhaps you've heard on the street. He really is a nice guy. He really does know his stuff. And he gives good webinar every month to our private membership area,
which we're going to be actually increasing in the near future.
Yeah. Based on the feedback of this one, I think we'll probably be doing more of these in the future as well. But so we've got a whole ecosystem of tools and strategies to help you become better at trading crypto, learning about crypto. And when we say crypto, it's not all just crypto. So what you're looking at here is a scanner and a small segment of what we refer to as our scanner or our sector radar. But all of these tickers over here, these are actually stocks. Now I could spend 15 minutes showing you how this view of stocks can help you identify which ones are likely to have big moves, either in a trend or changing trend with phases. This is our standard phase that Mish teaches, using our real motion alerts or triple play alerts. But suffice it to say, I'm showing you this page to let you know that even if you're just like dipping your toe in the water and you don't really want to open a crypto account, there's a lot that you could be doing to benefit from the halving, the bull cycle in cryptos right now, even just trading stocks. And what I'm going to show you now is that there's a way to do this that's completely automated. There's actually two ways to do this. You may have heard us saying a few minutes ago, one of those ways just gave us a fresh alert. And that alert came from the Crypto Pulse Quant system, which is also the one that Holden was referring to earlier, where what we do here is we track the top 10 largest cap crypto coins, and we rank them by TSI. TSI is our measure of trend strength. And this concept of ranking a select group of instruments by TSI and then trading it with a risk managed approach is one that we have used not only in crypto, but we started out with using it in sectors, then we used it in country ETFs, then we used it in global ETFs, then we used it in NASDAQ 100 stocks, then we used it in large cap stocks, now we're using it in small cap stocks. Every single one of those implementations, the concept, which we didn't make up, we didn't make up the idea that if you identify the right group of instruments that trade as a group, and then identify the strongest ones with a reliable indicator, and then trade it with a risk managed disciplined approach, it's a proven strategy. We just made it really easy and applied it to a lot of different assets. And when you apply something like this to something as dynamic as a cryptocurrency, you can get some pretty crazy results. I mean, results that, quite frankly, are almost embarrassing to put on a chart. And Holden might not admit this on camera, but he's said as much, that really these results are too good. We shouldn't even be putting numbers up this big. And I'm not talking about these. These are individuals. These aren't even unbelievable, right? DOT, a coin going up 300%. That's not that.
This doesn't include our most recent trades.
No, these are actually, most of these trades were from bear market or accumulation phase when I put these together. Because to my point, do I need to tell somebody we're going to do better on a trade than 120% or 80% or 84%? I don't think so, 563%, because when you sum them up, this is what the Crypto Pulse Quant results look like. Now, as Holden pointed out, and I think rightfully so, 2017, Bitcoin was up, so the red bar, almost 1,500%. That's ridiculous. I mean, that we're probably not going to see that again. But the thing that is, I think, more impressive is that Crypto Pulse Quant, remember, is not necessarily trading Bitcoin, and it's definitely not buying and holding Bitcoin. So we were able to beat it, even though Bitcoin was up 1,500%. More impressive, though, is in 2018, where it gave back a little of that. Bitcoin gave back 74% of it. I don't know about you, but if you've ever held a stock or an investment that goes down 74%, doesn't feel so good. Crypto Pulse Quant was only down 30%. Now, you can see here, and you can see here, these are the same numbers. Again, you get some really good numbers when you've got a good year. So does Bitcoin. But when you have a bad year like 2022, again, Bitcoin down 64%. Nobody wants that. We're down 21%. And the reason that we're able to do that is because we're not in it the whole time. And we're not always in Bitcoin. So we're able to outperform Bitcoin for a lot of these years because we may be in a completely other coin. We had great runs in Ethereum, for example, when Ethereum was really coming on. All right, so if I summarize the process, it's this easy. We take the top 10, as Holden pointed out. That top 10 is determined on a quarterly basis, and then we rank them and trade them. We take the top 2, and then we trade them when the top 2 are adequately the top 2. And that means that once you're in a position for the top 2, you don't get kicked out just because it goes to number 3. And then we'll take profits by scaling out. Now, the actual systematic scaling out over time is a little bit more than we've got time for in this webinar. But the other thing is we'll get out with stops. So as I said before, we're not buying and holding. That's why we can have such better drawdown numbers. Now, the other thing that we've done to make this easier, because from our perspective, it doesn't do you any good to have a really sophisticated system that's really complicated and difficult to execute. It can have the best results in the world, but if it's not easy to execute, then it doesn't do you any good because chances are you won't be doing it. So to keep it really simple, we look at the market every evening at 7 p.m. That's kind of the end of the trading day on a 24-hour clock. And that's when we figure out whether or not we need to make any changes in the portfolio of 2 that wouldn't include taking a price target or getting out because of a stop. So we actually got a trade today. So if you want to jump in on a membership, which I'll give you an opportunity to in a minute, you can be sure we'll have a brand new trade today. Now, going forward, anytime there's a new trade, you'll get a text. That's how we knew. Actually, Holden and I were sitting on the webinar, and someone who's a member happened to put in a questions box, thanks Vince, that hey, we got a new trade. And yeah, we did. Looks like this. It's an easy text. It'll tell you that we're getting in, and you want 50% of your position in the new trade. Now, it's not DOT. It's not this trade, right? This is historical. Don't run out and buy DOT because that's not the trade. Now, the reason we make such good money with the system is because it's got stats like this. The average win is 46%, but the average loss is only 13%. All right, so when you have a ratio like that, you don't have to be right all the time. You don't even have to be right half the time to be able to do really well. As you can see, our largest drawdown at 58%. Look, this is volatile for sure. That does not feel good. But the largest drawdown in Bitcoin is probably well in excess of 80%. And if we were to go to other coins, it's 100%. So
I think 2 years ago, Jeff, Bitcoin drew down. If you go back a few charts, you'll see the yearly performance. I think it drew down 65% just in 2022.
Yeah, and that's a calendar drawdown. That's not high to low.
Right.
I mean, I can tell you I made a chart at one point, Bitcoin 86% drawdown, high to low. It's not calendar, it's high to low. So, but you know what? AOL, well, it was AOL who did it. So did Meta, so did Amazon, so did Netflix. Netflix was the worst. I think Netflix may have at one point actually had an over 90% drawdown. Well, you don't know these things because nobody's telling you this when they're all at all-time highs and they're the Magnificent Seven. But the truth is, in order to ride that kind of volatility with a buy and hold approach, that's what you have to sit through. We don't do that. And that's what this whole TSI relative strength performance ranking systematic trading model does. All right. So when I said easy, you have 2 trades at any one time. You only have to worry about finding a new trade at one time of the day. I'm going to say it rarely happens because in the context of things, we don't get into new trades all that often. We're talking about weeks, not days, and probably months is more accurate. Once we have them, we have 3 scales, a stop, we manage them. So it's really easy. And not only that, once you get into it, you'll know exactly where your next stop is. You'll know exactly where your targets are. You could set them and almost forget them. Once you hit a target or a stop, then you'll know where the next one is. All right. Now, this is where the numbers get crazy. So I'm just going to warn you before I show you this. This is true. I don't want you to think that we're suggesting that things will be this good going forward, although it's been a crazy year this year. And quite frankly, if you string a handful of years together where you get triple-digit percentage gains, you wind up with crazy numbers like this. So Bitcoin, I think these numbers are since 2017. I should have put that on the top. Maybe going back a little further, maybe you know off the top of your head, Holden, but this is since the inception of our model. Bitcoin's been up 43,000%. That should be 43,000, not 4,000. Is that right? No, 4,000, not 43,000, 4,000.
I've got it in front of me. These numbers are correct.
Yeah, 43. It's 4,000, not 43,000. That's correct. The problem with crypto. It's like all of a sudden 43,000 doesn't sound like it's not unreasonable, because I know that 96,000 for crypto quant is correct. And so starting with $1,000 and just letting that compound with crypto quant, that would be worth $969,000. 5,000, it turns into 4.8 million. That's the power. I mean, even if we do 1/10 of that going forward, that is the reason to be looking at, or a reason to be looking at crypto. And remember, I'm not talking about going out and buying Dogecoin when it's like 1/10,000th of a penny and having it rally to 2 cents. I'm talking about being in the coins that at the time are considered the blue chip coins of the space. And even these have crazy moves. And again, it comes down to risk management, right? So the idea behind Crypto Pulse Quant is big swings. You don't have to babysit them every day. And it's not buy and hold, but it's the closest thing to buy and hold you'll find with a risk managed mindset. So we had that model going for a couple years, and with only 2 positions and not a lot to do, it was almost like it was too easy. And our feedback was, we want more. So we don't disagree with that. So we found a way to take quicker trades. And Holden, I have to give Holden really the credit for developing this, Holden and James. And you don't get to see James on these webinars. But after this, maybe we should pull James out into the public eye. He does the behind the scenes members stuff, and he's what's the phrase? He's up to his ass in alligators with I think with all the things that he manages on the back end. But anyway, Holden and James are really both the 2 crypto gurus, and they took what we already know and came up with a strategy that we call Sprint. Sprint, for a couple of like marketing meanings. Right now, I'm going to use the meaning because it's quick. Like the average trade here, couple days to a couple weeks, you're in, you're out. So it's it is something that you do have to kind of be on top of the market. But again, we're going to make it easier for you. And this chart here, it's not up to date intentionally, because I really wanted to point out that we're in and out of Bitcoin, and this blue chart is the closing value of the account by being in and out of Bitcoin using this model. And the red line is Bitcoin, the currency. Now, in this model, we don't, or this system, we don't really expect we're going to beat Bitcoin long term, but we do expect that we're not going to have huge drawdowns, and we're not going to be in Bitcoin very often. So every time this is flat, you're sitting in cash. Maybe that means you're bored, but it means that you're not going from whatever this was, 68,000 down to 18,000, or whatever this 15,000. I think we got under 15,000. Right? This is a drawdown you don't want to ever have to live through. Meanwhile, you're just getting in, getting out of, in these quick trades and growing your account like that. Right now, here's a view of Bitcoin on that model up to date. So you can see in the bull market of 2023, it continued to go. Now this isn't time-based, this is every single trade. But again, you can see that over this time frame, which is only a couple of years since 2018, it's up 750% versus Bitcoin itself up 200%. Now, what you're actually looking at is a screenshot of our member area, and you can see that we not only do this for Bitcoin, we do it for Bitcoin with 24-hour clock. I'll explain that towards the end, but we also do it, I don't want to give that away. We do it for this too, and we do it for these other coins. So these are the kind of altcoins, and they're quicker. So that's what Bitcoin looks like. Here's what Ethereum looks like. And here's just a quick sense of what we mean by in and out. Like, I don't expect you to figure it out by this model. By the way, this is not a TSI ranking system at all. It's volatility based. We buy the explosion of volatility. We take profits. If it continues, we have a trailing stop that moves up along with it. So we are quick, we're quick to get in, we're quick to take profits, and we're quick to get out if it starts going against us. And I just wanted to point out, so here we're in, here we're out of one, here we're out of the other, and this one took a little longer to get out, but keep in mind, this is an intraday chart. This isn't a daily chart, all right? So where's the entry? Here on 23rd, maybe, and by the 6th of the next month, we're gone with a 23% total profit.
And this is one of the longer trades that I remember seeing. Typically, our trades can do exactly what we see here in the span of, a 5-day week.
Which would almost be something like this. And yeah, so they're pretty quick. And again, this is an outgrowth of wanting to be in and out, more action. You're not going to get 100% return on this. You're just looking to not lose, get some action, be in and out, and be able to trade all different kinds of altcoins. So you can see there's an explosion. We're getting in. We're taking profits. Sorry, we're getting in. There's explosion. We're taking profits. We're taking profits again. Taking profits again, and we're gone. All right. So if that's the kind of trading that you're interested in, Sprint is the name you want to keep in your mind. Now, this is what I didn't want to give away before, because I realized I was going to focus on this for just a second here. We understand that crypto can be a little intimidating at first. Now with ETFs approved, it's easier. But truth is, we've been trading ETFs all along with BITO and GBTC. GBTC now is probably going to be better than it was in the past, but BITO tracks it pretty closely. So you can trade ETFs that are just like a stock, but The cool thing here is you can actually trade a stock. So we have found that if you take the alerts for BTC, Bitcoin, and you trade MicroStrategy, MSTR, which is a stock, you do really well. Now, the reason that this works is because MicroStrategy as a company, if you're not familiar with it, is a company that has basically loaded up its balance sheet with Bitcoin. I think, Holden, did you say they actually own 1% of Bitcoin?
Yes, I believe they own 1% of all either circulating or maximum circulation Bitcoin.
It's insane. It's insane. So at times it is it can be used as a proxy for Bitcoin. This is all mechanical. So like the proof is right here in the numbers. The stock itself up 280% over this time frame, trading it as if it was a crypto, up 583%. And yet, just to be clear, you're just going to your trading platform, whatever you're using now, and you're buying a stock. All right. Now, before I get off this subject of the sprint trades, one of the ways that we make it really easy is we only trade these during market hours. So crypto is a 24/7 market. And again, as I started by saying, it doesn't do you any good to have a really great system, but if it's too complicated or inconvenient to trade, you're not going to trade it. So we understand that. So this is why we have a Bitcoin 24-hour and a Bitcoin BTC. Some people would rather get out in the middle of the night or at least be alerted to it. So we'll give you the Bitcoin alert at 24-hour, 24/7. But if you don't want to do that, then you follow this model. You'll never get an alert that isn't kind of in normal business hours. And that's true of these other coins as well. They don't have we don't have a 24-hour version. All of them are during market hours. Now you would think, some of you might, that would degrade the performance. Well, we didn't really find that, and this is a overview of the performance. So each one of these clusters is a year. Let's just take 2020, probably not a favorite year of many people. So let's go to 2021. Here's 2021, the year, and for each of these coins, the bar represents the performance that year. The thing I want to point out here is that they're all up. They're all up nicely. Yeah, every year we have one or two that don't join the party, but the system itself works really well, even though you're in and out really quickly and you're trading during business hours. So when I say business hours, I'm talking about 9 to 5, right? And again, just like the last system, whenever we get an alert, you'll get a text, you'll get an email, right? So there's two systems. There's the Crypto Pulse Quant, which is large cap, two models, two positions. And then there's Sprint, which is, let's call it 2 weeks, any one of 7 different instruments. You're probably not in more than 3 or 4 typically at any one time. It's rare that you're going to be in 7 at once. So you don't have a lot to juggle, but the way we've kind of presented this and provide it is not to be focused on it as I'm going to manage these all as one portfolio, but more so these are some hot trades that you take individually and string them together as you would any alert service. So what I'm about to show you is the opportunity to take either all of what I've just presented to you or part of what I've just presented to you and run with it. So what do I mean by that? I started with the Crypto Pulse Quant model. Now, if you just buy this by itself, its value would be $29.97. And again, remember, that's the automated alerts. You'll get a model portfolio that'll tell you what we're in, where your stop is, where your targets are. You'll get a complete trade history. And that's the two positions at any one time. Now, if we were to take, and we may just do this, just the Bitcoin and a Bitcoin ETF and the MSTR, put that into one model and say, hey, you can trade crypto without even having to trade crypto. That model itself would be worth $14.97 a year. If we added in the altcoins, another 5 trading opportunities, that model would be worth $19.97 a year. Again, automated alerts, model portfolio, complete trade history, everything you need to be able to just follow along. If you'll remember in the beginning of my presentation, I talked about the dashboard, and that shows you not just the 20 or so stocks there, but we have a lot more stocks to enable you to keep track of the stock market stuff that's happening in or around the crypto space. And on top of all this, we've also got monthly mentoring, which we've been talking about, and this is what Holden does every month, a live session with members covering all different topics. One of those topics, which has been part of the conversation for probably close to a year, is guiding the members through the roadmap that we just showed you. Because as excited as we are that the halving is here or coming, and the bull phase is coming, and the expansion phase has been great, the truth is that when you know this framework and when you have this guidance, nobody likes a bear market, but it really, to put it in the words of a millennial, it doesn't suck when you are able to identify that the bear market is ending and the accumulation phase is beginning and the expansion phase is beginning. And so now everybody's jumping up and down because they think it's a bull market, and we're thinking, well, yeah, we've seen this coming for 6 months or a year. On top of all this, you'll get what we call VIP support because, as I said earlier, you can get us on the phone in the office, Rob on his cell phone, live chat. We're very accessible. Email, of course. All right, if I add the value up here, it's over $11,000 for the complete package. And on top of that, it's a mechanical system. If this thing doesn't make money in the year that you've got it, the next year is free, right? That's as simple as that. But more than just a performance guarantee, we also understand, we're traders, that trading and different systems isn't for everybody. There's no one size fits all. We also understand that crypto is new and different for a lot of people. So we've got a satisfaction guarantee. Give it 6 months, all right? Try it out. You don't have to use real money. Demonstrate that you gave it a shot. Show up to the live mentoring. Take some paper trades. Yeah, if it's not for you, we'll take 100% of whatever you have invested with us and let you apply it to any other system. So there's no lost time. It's just the effort that you put in. Our experience, having taught people for literally decades, is that if you want something to work in trading or investing, you really need to see it through for 6 months. So we're doing this 6-month guarantee as much as I shouldn't call it a favor. We just know that you're much more likely to be successful at anything if you give it that time. All right. So we've talked about a lot right now. But I just want to remind you before we wrap it up, whether you do something with us or you do it in some other way, now is the time to be focused on Bitcoin. The halving thing is coming. It's going to be all over the news. Now you know why it's important. Now you know more about what's going to potentially lead up to it, and more importantly, what could come out of the other side. Because as soon as the halving happens, it's going to be old news 3 days later, but it's not really old news. You know that now. The regulatory environment, that's pretty much old news now, right? But it's not old news, right? That is indicative of an environment that is shifting to a whole new era. And as you've already seen with the charts, with the expansion phase, technically, this stuff is set up to move right now. What you don't realize is that when we're showing you the TSI chart and you see that they're all strong, it's not just Bitcoin. Like Bitcoin isn't even the most exciting thing out there. It just happens to be the one that everybody watches, and it's the benchmark. So it's great that it's exciting, but it's not the most exciting thing out there. In fact, it isn't Bitcoin that we just bought today. And remember, we only trade two. So we're entering the new era. I think the best example of that was the 5 coins. All of those things are doing things that are mainstream technologies that most people have no idea what's going on. All right, just like nobody understood what was powering the internet when that first came out. Nobody understands really what's going on with this blockchain thing. I shouldn't say no one. Most people don't, but the people who know, and you don't have to understand all that stuff to trade it, right? All you have to understand is how to measure risk. And again, whether you do it with us or you do it with someone else, get a trusted mentor. It is definitely, it's not the Wild West anymore, all right? There is definitely large cap stocks or large cap coins that are no longer just wild craziness. And I encourage anybody to start to look into this, of course, responsibly. That's what we're here to help you do. So I've got 3, I feel like I haven't done this presentation, so I feel like behind door number 1. I don't usually do it this way. So behind door number 1, we have large caps, right? So seriously, large caps, if you just want to try out large caps, which is the one that's up 96,000%, but more importantly, it's big caps, 2 positions, large swings, don't need to babysit it, not that fast, $997 a year, all right? In the first year, you'll definitely understand whether or not this is for you. Now, if you like the idea of being more active and you like the quick in and out, then Sprint. And Sprint is everything. It's all 7 of those. So you're getting the Bitcoins, 24-hour and the easy business hours one, as well as the ETFs, as well as the stock MicroStrategy, as well as the 4 or 5 altcoins. So again, $997 a year for that strategy. Now, if you want both and you don't want to think about a $997 a year, then we have the Complete. And the Complete is the Quant, the Sprint, and if you put those together for a year, you get it for $17.97, so you get a discount on the annual. But if you know that you're going to want to do this for more than 1 year, then we have a deal which is $29.97 for VIP. And what VIP means is that rather than pay $17.97 every year for both, you'll pay $197, all right? So $197 a year after the initial investment of $29.97. You choose. All you have to do is go to marketgauge.com/crypto-complete or give Rob a call at 407-770-7637. You could text him there as well. I know it's getting late, so if you just want to send him in text and say, give me a call, let's set up a time, just do that. Or, as I said, go to marketgauge.com/crypto-complete. All right, so final wrap up here. You've got the Quant model. You've got the Sprint models. There's 2 of them, but we're going to just include both of them when you do a Sprint option. And whether you do the Quant or the Sprint, you will get the dashboard and the expert analysis, which is written analysis and reports. You will also get monthly mentoring no matter what option you choose. All right, so the dashboard and the mentoring are included in whatever option you choose. And then the question is really just, do you want to do some kind of an annual with either of the options, or do you want to do a lifetime VIP? Again, it's all laid out at marketgauge.com/crypto-complete. complete or give Rob a call. So we're definitely burning the midnight oil here, but I hope you guys have found it helpful. I hope that, again, whether you choose to work with us in a more engaged trading environment right now or not, I hope you can see how right now is not only not the time to ignore crypto, but it is the time to get to know crypto. Again, I don't care if you want to trade it or not, but I do care that you're here to learn about crypto, and that is a great decision. And even if all you do is walk out of here figuratively and say, you know what, I am going to follow those 5 coins. I'm going to keep an eye on what Holden writes for free in his free reports. That's a great first step. But if you want to make money on it with the coming bull market, we're making it as easy as we possibly can. So with that, we'll take some questions. We will, I think, have to limit it. I see, Holden, you've been answering some in text. Is that you?
Yeah, we did just get a good question from Lloyd, though. So Lloyd's asking, does this require a wallet or a Coinbase account? So the answer to that is, if you want to use our quant strategy, which is the 10 large cap cryptocurrencies, you'll want to have either a Coinbase account or a dedicated cryptocurrency exchange account, because these are coins or tokens. They're not publicly traded stocks, and they don't unfortunately have proxies that are publicly traded either, like how Bitcoin has its ETFs. So to trade the quant strategy, I have used Coinbase for years now. I've never encountered any issue with it. I also know, for those of you who are concerned about protection and getting scammed or hacked, Coinbase offers something that I pay for. It's a subscription program they call Coinbase One. It comes with a bunch of perks. One of the big ones, and I actually looked this up earlier to respond to someone else's question, is if you pay $30 a month, on top of your free Coinbase account, it comes with $1 million of account protection in the event that you are exposed to vulnerabilities in their authentication system, or someone hacks your login credentials, under certain circumstances. And so that's something that Coinbase offers that I haven't seen really anywhere else. Other than them, I'm a longtime fan of Kraken as an alternative cryptocurrency exchange. For the Sprint strategy, we do have MSTR, MicroStrategy, and BITO, as well as we'll be adding at least one of the new physical Bitcoin ETFs for the sake of tracking trades with our Sprint strategy. That would be the one where you won't need any kind of new account, and you can trade the stocks as they currently exist.
Great question, Lloyd. Are there any other questions? I know Holden's been answering them extensively in text, which is helpful. And I do know it's late, so we won't keep you any later if we've covered everything.
Jeff, let me mention one thing.
Sure.
I would hope that the information that we've provided you guys has been valuable, especially, this session specifically. But I did want to elaborate by saying that aside from our monthly live sessions, which historically we've done 1 hour and a half or so session a month, with similar format to this, where we can interact live. Jeff, correct me if I'm wrong. I can't remember if it's just our Quant subscribers or if Sprint subscribers are also entitled, but once you guys have access to our product suite, we will also have a page in there where you can schedule to meet with me individually. I won't give you specific trades that we aren't offering otherwise with our products, but I will be more than happy to talk to you guys through ideas for portfolio construction all the way to discretionary trading opportunities. So I just wanted to make sure that we mentioned you will have the opportunity to schedule individual sessions with me to talk about anything crypto, except for taxes and accounting.
Yeah, that's a really good point. I totally forgot to mention that. Because we put that out as a charter member offering, and we have still made that available. We're pretty quiet about it, but that is true. I mean,
I talk to several people every week. It's a good time, honestly, getting to connect with our subscribers individually, and I think we provide a lot of value by offering that as well.
Oh, I know we do. I know we do, and I really should have. I should have put that as more of an emphasis, because to be clear, that's over and above the webinar, and yeah, you can just book a call now. To be clear, you can't do it every day, but everybody that has signed up has been pretty respectful of Holden's time, but he's very accessible. Great point. And yeah, so someone was asking about the written commentary that you put out. If you go to our site, you'll find it in the crypto area. And if you're subscribed to get Mish's Daily or Market Outlook, you'll get it when he puts something out. All right. Awesome. If you don't have any more questions, write down the number, screenshot this page, whatever it takes, marketgauge.com/crypto-complete, or give Rob a call, 407-770-7637. If you've got any feedback for us, good, negative, as long as it's constructive, we love to hear it, and we appreciate your time, and everybody who has stuck around for the full 2-hour duration. So we can no longer say that it's all me when we go 2 hours, because now Holden was involved. So I certainly appreciate that. Thank you very much, everyone.
Hey, Jeff, before you wrap, just make sure there's someone asking if you could repeat the offer at the end.
Oh, Sammy, I apologize. The idea of lifetime is this VIP here. So if you opt to get both the Sprint model, the 2 models, and the Quant model, you have the option of either doing $17.97 per year, $17.97 per year, or you can do VIP, which is a lifetime discount of the annual fee from $17.97 down to $197. All right. So that's the VIP. That's the lifetime. And Sammy, if you came in late, feel free, just give Rob a call at 407-770-7637. And if you got any questions, he can bring you up to speed. All right. Awesome. Thank you. Have a great night. Holden, thanks a lot. This was a lot of fun.
Yeah. No, thanks for letting me join.
I'm going to call it a wrap.